And today is Friday, April the 23rd. Sorry I couldn't get to you yesterday. I'm getting very worked up about my move. I told you I will be moving to Spain. Spain remains closed and my house here is for sale, so I won't be going to Spain. I will be going to Mexico because Mexico is open and I don't worry too much about it because I'm vaccinated. So I recommend that you take your vaccine and that will free you a little bit. Okay, that's all. Just a little introduction to let you know I will continue with these videos to the best of my ability. But remember, I will be in a strange place, moving from place to place. Don't know exactly what is going to happen. So I'll try my best. All right, let's move on. I have considered 3 new trades. One is on Dell, and you can see I enter all the data here. And Dell happens to have too much of a volatility skew, meaning that the back month options are more expensive than the front month options. So you're buying the expensive and selling the cheap ones. So we have to exclude that. Okay. Then I entered the liquidity. You can see that here. All you need to do is create duplicate and you will see what your mid and natural. That gives you an impression of the liquidity. So let's put 17.6 and 18.3, and that's a little over 3%. Again, that's a no. Now you have 2 no's, all right? The earnings were beat by a wide margin. And in order to see that, go to the chart and display, make sure you can display the earnings, the last earnings, and you can see that it was 2.1 or 2.2 versus 2.7. 2.2 versus 2.7, that's a good, decent beat. I want 10% or more, so that was good, but the volatility is about 15%. That would be good too, but these 2 factors make it very difficult to trade this. So I would not recommend it after all. Let's look at IBM. And let's look at the Analyze tab. I have already selected the trade, IBM. And let's display it here. All right, so the stock is trading at 143. So you can use the 140 or the 145 if there is such a thing. Let's say 45. We can compare those two, right? See which one is better in terms of price or otherwise. Okay, let's open that. All right, so the price is slightly better for the 140. Let's look at, this is the 150 is delta negative. I don't want that. I want it to be delta positive, if at all possible. Yes, that's delta neutral, as you can see. All right, so it's going to have to be the 140, I think. Let's go to my charts here. 140. 1467 is why I calculated. So 2 of those, 2 lots, or 3 lots, 6 lots actually. Okay, 6 lots. All right, that's good. 6 lots will give me $8,800, which is less than 10% of my account. Okay, earnings 1.77 versus 1.66. Difference of 6%. Not ideal. Okay, but you can see that the stock moves anyway, so there has to be a reason for it. You would look into the news and see if they have raised guidance or something like that on the day that the stock jumped, which was 2 days ago, here on the 19th. Scroll down. And there will be some information about them raising estimates. Okay, so the revenue is what is increased. The earnings were good, but there is a raise on the earnings, on the revenues, which is better than expected. So that's why the stock is going up, even though it doesn't reflect on the earnings. There it is. The revenues beat. So it doesn't show in the earnings. So that's important. All right. And so, yeah, that makes me interested, even though it says do not trade. Why? Because it's less than 10%. 6.6% is pretty good. Okay, so if the revenue was better, that means that they probably have in revenues an increase, and you would have to look that up. Okay, let's go take a look at the trade, Analyze tab. Okay, so we enter these numbers here, and it's changed a little bit, but not by much. 19, 19, back month. Okay, let's enter this again. The front month is 16.35, 20.71, 19.06, 19.3. Okay. So the difference, as you can see, is minus 65. The skew is acceptable for the trade, even though it's negative, meaning that it's slightly more. The average volatility is more for the back month, but not by much. I consider 3% acceptable, so that's good. Liquidity, and you use those two numbers. The mid is 14.82 and the natural is 15.29 and it's 3%. That's okay, it's just 1.1%. It doesn't concern me, so I would say trade it anyway. And the percentile of the IV, you can take a look at the chart, display the implied volatility, and you can see that is at the lowest end possible over the last year. So I consider that excellent. It's a 0, really. Current IV percentile is 0. You can look that up also by going to the trade tab and scroll down until you see current IV percentile. That's a 0. So that's excellent. So yeah, I want to trade this, no question about it. All right, so let's go to the Analyze tab again and enter our trade here. We're going to do the 140. Okay, create duplicate, confirm and send. Make sure you have enough money. That's 8,000. Yeah, let's do that. Send that. All right, let's wait until it gets filled. In the meantime, let's look at our last selection here is DHR. And let's enter DHR and take a look at the chart. We have 250 and 240. Let's take a look at the chart first. Okay, it's breaking out to new highs. You can see that it's been in this long range for a long time. And here we go. Let's go back to the chart. Sorry, I got distracted for a second there. Okay, so it's been in a range now. It's breaking out. That's significant, all right, because it means it's likely to keep on going, and that's what we want. Okay, the estimate was 1.67. They beat expectations by a wide margin. Let's put those numbers. 1.67 versus 2.52, 50%. Remember, I'm looking for 10%, so 50% is, out of this world. Good. All right, let's go to study the volatility skew. Let's go to the Analyze tab. You can really do either one of these two. Okay, 260. We don't want to do June because that's is less than 90 days away. 56 days. So unfortunately, we have to go to September, which is way out there at 147. That doesn't bother me too much. It's okay. But you look for 90 days to expiration. That will be ideal. 90, slightly over 100 days. 147 is distant. But that just means we have more opportunity to sell front month options against it. So more time for it to make you money. So let's delete this one here. And let's enter our data here. The front month, 21.53 versus 21.03. For the back month, 23.94 versus 23.69. If it looks crooked, it is crooked. But all it takes is, let's fix this once and for all. Let's take this and delete it, or say edit, cut, and we're going to paste it here. Edit, paste. Cut cells. There you go. There you go. Okay, so now we have back month, front month. Okay, that way they are the same organization here. The back month is in front on top, and the front month is below. You can make sure that you get the right months. That's May and September, if you want to. May and September, they're written down there. It's highlighted here in orange, so you notice that. And the difference the front month is slightly more, slightly less, so it's negative skew, but it's acceptable because it's less than 3. So both of these things are okay. Now, for the liquidity, this might be the sticking point. Let's see, create duplicate, and you enter the mid price, 50.1, 50.1 versus 53.7. Okay, 3%, just barely. Okay, let's go to the trade tab, and in the trade tab, the current IV percentile is 3. My minimum here, or maximum, is 15%, so 3 is perfectly acceptable. So yeah, we got it all. We can trade that. How many are we going to do? Create duplicate, confirm and send, and you see the price is 5,000, so I can't really do 2 because that would be 10,000, that's too much. So we can only do 1, send, and we'll be filling them briefly, I presume. We can move the bid a little higher on the IBM, cancel, replace, and just unlock it so it goes up a little, and you keep doing this until it fills. Okay, the DHR got filled, the IBM still holding. Let's increase just a little bit. You can do by 3-cent increment or something like that, but it really depends on how wide the margin is. Okay, in the meantime, let's look at all our trades here. Start by symbol. Let's organize them by symbol, and DHR is already entered. Let's look at the analyze and the risk graph. There it is. We already made 85 bucks. Okay, not necessarily true, but it is there. In the long run, we don't know if it's a good sign, but it's not necessarily going to hold in the long term. Facebook, okay, Facebook, okay, we have these expiring options today, okay, and the stock is due to report earnings here on the 28th. We can go to the account statement, look for Facebook, and we have 800, we're short. We are $870 on the whole, so to speak. All right, what do I do? What do I do? I'm tempted to just eliminate this because we're so close to earnings. I remember we were making money on this one and suddenly, okay, so let's get out of it by doing this. Select the shorts and say Analyze Closing. I'm sorry, Analyze Rolling. Then we change the ones we're selling to the 18th of June. And then we end up with June. We can do this first. Analyze Closing, Strangle. And then you see which ones will give you more money back. Obviously, if you did this, you make sure that when you enter the two trades, you are going to end up with a flat line. Then you figure out which one gives you the more money, because that's the one you want fulfilled first. Analyze trade. I'm sorry, what we want to do is create duplicate. And then we can say, okay, once the first one is filled, we can fill the other. So we say one triggers all. Okay, and then we make the second portion, create duplicate. And here they are. First the strangle will fill, then the diagonal. And confirm and send. Let's move on to GS. That's, we just entered recently. IBM still holding. Let's modify that. Let's increase by 3 pennies. You see, if the margin between the two is wide, then you have to enter it somewhere in between. And thus liquidity is important. Otherwise, there it is. And IBM, of course, is liquid, but it somehow, at this particular time, is not as usually liquid. Let's go to Intel. Let's go to the chart. Ooh, big drop here. They reported earnings and exceeded expectations. It went down anyway. Okay, that was my strangle, and the Facebook should now, yeah, is working on the second trade. Right? Very, very close. Okay, let's go to Intel, as I was saying. Let's go to the Analyze tab. And here's where we are. We have, oh, look at this, 12 put short. Okay, so we can sell a bunch of puts, couldn't we? Analyze closing. Let's take it from the call side. We're going to sell as much as 6 puts. Instead of calls, make sure it's puts. There. So our deltas will be decreased. Right now, the deltas are 300. So we're taking a bunch of credit here. All right, I think I want to do that. Confirm and send. Reduce my deltas. Great. That looks great. Okay. Is it possible that, yeah, I don't see signs that it will reverse, although it's in this Ichimoku cloud. We don't have buy signals here on the stochastics. I combined the two and I said it could still go lower. All right, let's move on to lows. Analyze. 7th of May, we need to change nothing. I like it when it is here slightly delta positive and it's right there at the top. It could really collapse here, but who knows? It can also make a strong move up. So I assume that it's going to go down, but I don't count my I don't count the eggs before the chicks before the eggs hatch. Okay, Facebook is now done. We don't own it anymore, and so it gets out of my watch list. Okay, so then here for lows, I think we're going to leave it the way it is right now. We can roll this up. Let me take a look at the chart again. We could roll these calls at a 190 to 200. How about that? Analyze rolling. And then we are going to sell the 190 and buy the 200. Same expiration, July. And that gives us $617 in credit. And then our deltas become neutral. Right now it's positive 14. So why not take $600 off the table? And UE is delta neutral, and we have short May calls. We don't need to do anything here either. Let's move on to Texas. Instruments. Deltas are a little big. Let's see. I think I'm going to leave this right now, the way it is right now. We have plenty of puts here. The calls are minimal here. Let's move this call up to 95 in order to take profits, because I don't see much point in keeping this May 175, which is deep in the money. The stock is moving up nicely. So let's analyze rolling. And we're going to buy the 195 while selling the 175. Same expiration. And that way we get $1,272 back. And this is the way you keep on going for the rest of the year. And then before you know it, one day when you least expect it, you make a whole bunch of money. But you keep on neutralizing your deltas is what you do. All right? And you trade once a week. What could be bad about that? Okay, so thank you for attending this, and I'll see you soon, probably from Mexico. Thank you very much. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.